Joseph, another traumatic day at Banco Espírito Santo. The Portuguese lender had very bad results late yesterday. The shares are down about 40% this morning, but the bonds are also down. The subordinated debt is also down. So perhaps there's only one of these two groups can be right. If you're saying that the debt is worth a lot less and is going to be bailed in, then that assumes all the equity will be wiped out. But then somebody somewhere is betting that the shares are going to be worth something in the future. So who's right?
Yeah, I mean, the subordinated debt fell about 20 cents sort of overnight, which is a big move, and they're now between 50 and 60 cents in the euro. I mean, that's after the half-year results showed a loss of 3.5 billion euros, which is way more than anyone was expecting. So it has a bit of kitchen sinking, but core capital also fell 4 billion euros, which is a lot to fill. And yeah, if you're buying into the equity here, and plenty of clever people have, you have to look at that sub-debt move and wonder, because the way regulations work now, they go through equity and sub. Even before any public money goes in, those have to be sort of bailed in.
So uncertainty for both sets of investors there, but what's the potential hole in the balance sheet here? We know there's been a big write-down, as you mentioned, on the balance sheet. Is that it? Could there be more to come?
Well, I mean, they kitchen sinked the original problem here, which was exposure to the wider Espírito Santo group, where sort of like 3 parent companies have filed for creditor protection. So you've got about 2 billion euros of provisions for that. Is that a kitchen sinking? Maybe, because they also revealed there were letters from the bank to the group sort of guaranteeing exposure, which the board didn't know about, which is that's a very bad sign. And also unrelated to the group exposure, they also said there were special purpose vehicles in existence, which they again didn't know about, into which the bank had issued bonds, and there may be exposure if they have to buy back those bonds from retail clients. So it's kind of rule 1 of crisis PR is get everything out as fast as possible. I'm not sure if they've done that here.
So a very difficult situation. Doesn't really kind of bode very well for the people who have signed off the accounts in the past.
No, I mean, only a month or two ago, they increased capital, and got that capital ratio up to like 11%. It's now 5%. This bank did avoid having to be recapitalised by the state during the crisis, but this time around, when the systemic parts of the Eurozone crisis are over, I think regulators and governments are going to look a bit less kindly on sort of individual bank problems like this.
What we could be looking at perhaps is a test case for the Eurozone's new bail-in rules. Joseph, thanks very much.